ETHZilla released its Q3 earnings on Friday. We'll go through all there is to know on the update and what remains to be learned in the future. Now, ETHZilla operated just 6 weeks during Q3 as they launched as ETHZilla around mid-August. In this time span, they've earned $4.1 million in revenue and an adjusted EBITDA of over $8 million that also accounted for the rise in their digital assets. Now, their revenue adds up to roughly $700,000 per week, or roughly 220 Ethereums per week in revenue, confirming what I had previously posted on X. Thanks to sign-up incentives when deploying their Ethereums on DeFi protocols, ETHZilla earned an API of roughly 7.5%. At the same time, going forward, they have said in their outlook that this yield will be between 3.5% to 4.5%. This confirms that ETHZilla is the digital asset treasury earning the highest yield on its Ethereum assets, as the market in general either generates no yield for the current ETFs, for example, or some of the DATs, or a base staking yield, which is around 2.5%. So ETHZilla is earning more than double currently the average yield of any other digital asset treasury. Once all of their remaining Ethereum is invested, and currently 74% of their Ethereum is invested in decentralized finance, based on the future outlook that they've given of 3.5 to 4.5%, in API, this will yield roughly $15 million in annualized revenue, or just under $1 in earnings per share alone from their investments in Ethereum. Now, on top of this, ETHZilla also has over $550 million in cash raised on the convertible note that is costing them 2% annualized in interest. This cash is invested in treasuries at 4.25% API, which is earning them a net spread of 2.25% per year, or roughly $13 million per year in revenue, or an additional 90 cents per share. Effectively, this gives ETHZilla a near risk-free revenue of just under $30 million, or just under $2 per share. This means that the stock is currently trading at 7.5 times earnings per share, which is significantly lower than the average for example, S&P stocks of 20 to 25 earnings multiples. Now, if you consider earnings to be only the extra income earned above the base staking yield of 2.5%, you get the earnings of their investment business to be about 50 cents per share. You would then need to add this to the net asset value of the company, currently sitting at least $23 per share if we count only Ethereum and cash and don't count assets. And if you then take half of the multiple that is typical for companies of 20 to 25 times earnings and just apply a 10 to 12 multiple on their investment business, you add up essentially $23 per share net asset value, then the multiple on their 50%, 50 cents per share earnings of the investment business net of the staking yield, and this gives you a combined value of roughly $30 per share, like I've been saying from the beginning, and this holds true even at the current Ethereum price, as I've just demonstrated. ETHZilla also published more information on its tokenization business, as well as the next steps going forward with that business. First, they've outlined the model. ETHZilla will buy pieces of assets valued between $200 and $500 million in tranches from 25 to 100 million. They will then issue the tokens through their Liquidity IO platform, sell them, and use the proceeds to repeat this process with a new asset, running this flywheel in perpetuity. They will also collect a portion of the yield that the token distributes, as well as a management fee on the assets tokenized. So as more tokens are issued, their recurring revenue grows. They'll also collect the yields on the tokens that they own until these are sold. And since the yield on those tokens will be much higher than their treasury yield, they're targeting real world assets yielding sort of 10 to 12% API based on their earnings calls. This will greatly increase the net spread of they're getting off of their cash pile. Now, as a reminder, ETHZilla has all of the needed approvals, including from the SEC and the tech needed to do this tokenization through their stake in Liquidity IO. And they also have the exclusive listing rights on Liquidity IO for Ethereum tokens. They also have the cash pile of over $550 million, which can be used for investments and therefore can ultimately be used for real world assets likely. Well, this hasn't been confirmed yet, but ultimately they will, and to deploy this asset tokenization flywheel. Now, this will also allow, as I've said, ETHZilla to grow the yield on their cash investments to around 10% API as per their earnings call. So the earnings of the balance sheet assets they have will increase, which will also increase the valuation of their investment business because in the $30 per share base price that we have just discussed, we were not counting their cash earnings or their tokenization business in any way. Now, the company has also said they will try to get third parties to tokenize their assets to access liquidity. But in my opinion, this appears to be less feasible in the immediate future as the competition for these is quite high. And until a real platform is developed with a lot of liquidity for them to be accessed, it's unclear how much of that they would actually get. However, the fact that they are able to use real money that they have to acquire assets and then tokenize it themselves in a fully integrated platform, which they are the only ones to do at the moment, that is something that is very real and already happening now. Nevertheless, Securitize, a direct competitor of ETHZilla in this space, went public at a 1.2 billion valuation with $4 billion under management. Now, Securitize doesn't own the tokens. It only handles the part to tokenize assets for third parties. So it doesn't hold them on their balance sheet. It doesn't have a strong balance sheet like ETHZilla does. This means that if ETHZilla were able to use its $550 million cash pile to buy assets, tokenize them, and use funds to buy new assets, just 8 times in a row in this flywheel, they would catch up with Securitize's assets under management at roughly $4 billion. And given that they have the same tag, the same approvals, and then would have then the same amount of tokens yielding, they would also justifiably be valued around the same range. Now, based on ETHZilla's share count, that would roughly be $70 to $80 per share for that tokenization business once they have issued all of those tokens similarly to what Securitize would do. Now, I think that this appears feasible for ETHZilla to do within a 18 to 24 time a month time span if executed well. And once that happens, it would give the stock a price in addition to their balance sheet of roughly $100 to $110 per share within this 2 to 2.5 year window. So even once it is fairly valued now with the tokenization business at zero, then this tokenization business can actually carry the stock much higher in the medium to long term. Now, during its earnings call, ETHZilla mentioned its first tokenization deals would be in securitized aerospace assets. To understand what that is, think, for example, of a portfolio of airplane engine leases, which yield typically 10 to 12% API. This is what they're starting with, particularly because two of the members of the management team, including the CEO, have prior experience in this space. Now, the second assets that are set to be securitized are consumer credit. To understand what that is, think of a portfolio of credit card and auto loans that are diversified across many people and securitized into one portfolio. That is based on previous interviews of ETHZilla's CEO, what they mean by consumer credit. And these have similar yields around 10 to 12% API, including reserves for defaults. And once these are done, they plan to move to also try and tokenize commercial real estate. That is what they've said during the earnings call. What they have also said, which is meaningful, is that they are planning to use the partnerships that they have done with ETHFi. And by the way, that one of the founders of ETHFi is an investor in ETHZilla, based on the press releases the company put out first when they launched. So in order to grow demand for the tokens that they will be issuing, they have those partnerships where they have invested funds in ETHFi and Buffer. And people who invest in the tokens that ETHZilla is going to issue of real world assets, they are going to be able to use those tokens as collateral on ETHFi and Buffer to get essentially loans against those tokens to be able to invest in Ethereum and then theoretically stake it or in other crypto assets. So this additional leverage and liquidity on the tokens will be further increased by those partnerships with Puffer and ETHFi, which is also part of the reason why they have done those investments with their Ethereum balance sheet. This is something that has been said by them directly during the earnings call. Now, for all the things we've learned on earnings, as expected, which were the revenue results and forecast, the tokenization plan, the updated information on the company, on the balance sheet, income statements, cash flow statements, as we were waiting for them to release at least one quarter for it not to be 180 Life Sciences anymore. There is also, these, by the way, were all in line with my initial thesis that was posted in what I had been publishing on X. So all of that was confirmed during earnings as projected. There are, however, still things we don't know as of today, based on that earnings report. The main thing we haven't yet seen, and that wasn't released in the earnings, is the exact balance sheet for ETHZilla as of today, meaning all assets and liabilities. We know their Ethereum holdings that they are updating, and their net asset value per share is based off of those Ethereum holdings and of the remainder of the cash that they have from the Ethereum sale to fund buybacks, and roughly we know roughly only half of that has been already used, and so they still have about half of that $40 million, so around $20 million available for share buybacks that they haven't deployed yet. We also know that they've repaid $25 million of their previous OTC loan that they had raised at some point against their ETH to fund the previous buybacks. But we don't know the exact amount of cash and assets that are on the balance sheet as of today. We know that at a minimum, it is at least $23 per share in net asset value. However, that is excluding any assets that the company has on its balance sheet, and it includes at least their liquidity IO stake, which is worth $1 per share based on the deal that they invested. However, it is likely that they need to update their cash position for us to see this more clearly, but it is at least $23 per share at the current Ethereum price of 3,150. Right. So, and this update that we haven't yet received, it is very likely that this will be received, if not before, on the moment that they launch their first tokens, which according to their earnings and their earnings call, is going to be within the next couple of weeks. Now, if you're to remember anything from this, ETHZilla announced earnings in line with my initial thesis and guidance. The guidance is that around $15 million annualized will be earned on their Ethereum investments, and around $13 million annualized as a net yield on the cash reserves until they deploy this cash into real world assets and go to an API of roughly 8 to 12%. So as of right now, their projected earnings per share is sort of around $2 on an annualized basis. And this is expected to grow as their tokenization business grows. So this was, as we had previously theorized in all of the theses I had published. It has also announced its tokenization business plan, which is as was expected. And they will also, as expected, launch the first tokens in the upcoming weeks. They have also said that the full year guidance for next year will be provided in their next earnings report once their tokenization business has gotten to a start. Now, we've also seen there is a clear path for this to be valued at $30 per share at current Ethereum prices and with the tokenization business at zero. And as this ramps up, if ETHZilla executes well on the tokenization business, which is a risk, this could have $100 to $110 per share target in the long term. I think in 2 to 3 years, if their tokenization business grows linearly, that is something that they could actually manage. Now, the main things to watch for in the immediate future are the token launch that is going to be upcoming in the next couple of weeks, and the release of their updated balance sheet, if not before the token launch for updates, then at least at the token launch. Thank you.